Just think, it was 3 years ago at this time that we had no clue a pandemic was on the way, which caused so many dislocations in our lives and in the markets. We went through sickness, lockdowns, government stimulus, a record-breaking stock and housing market, and crypto became somewhat mainstream. 2022 then brought a complete reversal of all of that. The Fed pushed rates higher, stocks crashed, crypto evaporated, and housing entered a corrective phase. Now the question is, what will 2023 bring our way? What I've learned over the years is that analysts don't know. They simply try to give their best guess based on different reports that they see. Unfortunately, they look at macro data, meaning the entire country or world, instead of getting micro into our specific market. To prove that point, most analysts thought mortgage rates would stay under 4% last year, that the S&P 500 would close the year at 5,000, and Bitcoin would be over 100,000. Today, rates are in the sixes. That's 50% higher than forecast. And the S&P 500 is under 4,000. That's a 25% miss. And the expected Bitcoin 100,000, well, that closed out the year just about 17,000. That's 80% lower than forecasted. Now that we've established forecasters are often very wrong, allow me to give you my forecast for 2023. I believe much of the drop in housing prices have mostly been realized in the DC-Baltimore metro area, and that early 23 will present some excellent opportunities for new homebuyers. I have several reasons for this belief that I can happily discuss with you over the phone when you have some time. In short, inventory is still tight, and the job market is thriving and quite diverse. And throughout the COVID run-up, we were missing one of the biggest bubble creators. That's investors, iBuyers, and Wall Street investment funds. I believe mortgage rates will be dropping slowly throughout the year as the Fed wins its fight against inflation. And if you add a healthy job market, rising wages, tight inventory, a drop in mortgage rates, and real estate prices that have already fallen 5 to 10% from their peak, I believe that makes the perfect combination for a healthy market moving forward. They say history doesn't repeat itself, but it often rhymes. I believe we will see a market that rivals 2014 to 15 or 18 to 19. In the first year, rates rose, stocks fell, economic concerns increased, and headlines everywhere were very negative. Sound familiar? As all those reversed, led by rates dropping, we jumped right back into an aggressive real estate market where buyers began competing and bidding properties up. If you want to map out your housing strategy for 2023, please reach out. My digital calendar is always open, or just toss out a time or two that's convenient for you and we will make it happen. I hope you had a fun time bringing in the new year, and I look forward to catching up with you soon.